Welcome to Talking Data Live. Thank you for joining us today. This is the 16th edition of our podcast series, Talking Data, which offers timely insights into macro data and its impact on the economy and markets. I'm Kristen Radosh of Arbor Research and Trading, and I will be today's host. Our podcast features Jim Bianco of Bianco Research and Ben Breitholtz of Arbor Data Science. We will be taking questions today after the presentation. You can find the questions tab on the panel to the right hand of your screen. We are 1 week away from the big day. Jim and Ben are going to update you today on the latest numbers and the potential impacts on the market. So Jim, we'll get started with you. What is the latest on the horse race? Why do the polls and the betting markets not agree?
Yep, let me just first start off by quoting H.L. Mencken 1 week before the election, that the American people deserve what they vote for and they should get it good and hard. And I think that both sides will agree with that, whatever the results are going to be 1 week from today. But to the polls and the betting markets, quick little backdrop. We have had betting markets on who's going to be the president back to the Revolutionary War. Throughout the 19th century, that was the primary way that all of the local newspapers used to write stories about who was winning in the presidential election. They used to trade the futures contract on the floor of the New York Stock Exchange in the year of an election year. So only during the Great Depression that we started with polling, and polling became the dominant form. But in the 80s, in the late 80s, because of the internet and the ease of putting together a betting market, betting had come back. Since the late 80s, the betting markets have largely been a reflection of what is the common theme in the polls. That's why I've always been very clear in saying that the betting markets are nothing but an aggregation of all opinion into one probability. This time, we've got something different. If you look at the poll analyzers, like Nate Silver 538, Charlie Cook, the Cook Report, The Economist Magazine does one, they're looking at the polls at face value and they're saying Trump has about a 10% chance of winning the election. The betting markets, when I last checked a few minutes ago, had Trump at a 40% chance of winning the election. Now, to be clear, he's still less than 50. Biden is the favorite in both, but one is at 40 and the other one is at 10. 40 suggests a much closer race. It also would imply that the Senate is much closer as well too. Why is there the difference? Well, the easy way to answer the question is pick your political philosophy and just dismiss the other one. But I think that there's a more nuanced answer that actually gets to why both are correct. As I said, the poll analyzers assume that take the polls at face value, and then they put them into an algorithm and they calculate their odds. The betting markets are assuming that there is a hidden Trump vote or a shy bias of a couple of percent. So when Trump gets within the margin of error, as he is in Florida, or as he is in North Carolina, or as he is in Arizona, the markets are assigning a 50%, and maybe in the case of Florida, better than 50% chance that Trump is going to win those states, even though the polling says Biden is leading by 1.5%. They're assuming that there's a hidden Trump vote in there that will push him over the top. We'll find out a week from today which one is right. But I think the big thing I want to point out, we'll dive into this a little bit deeper, is one says 40, the other says 10. It really comes down to whether or not there is a shy Trump vote as well. Ben, what say you?
Sure. So this will get to the second question pretty quickly here in this series. And, as you know, Jim, I'll push back on you here. So with Predicted and the betting markets in general, we've done a lot of work, a lot of the data work, looking back mostly at the past number of years, then of course back to the 2016 event. And I think there's like 2 or 3 things here to mention. One is that the betting markets, if you look at it like cross correlation functions to see who leads, lags relative to polls, there's consistency there that predicted lags the polls. So the polls are leading predicted, and they eventually move, eventually move in line with them over time. And I think that also goes with financial markets. Financial markets have a closer tie to, in terms of prediction, this is looking forward to the polls than they do to the betting markets. So I think the players that it's a small market, even though there's a lot of bets going on, is a biased sample. And I think that they build in too much financial market performance. The S&P 500, for example, you can take the S&P 500, take the polls, and I can pretty much get you to, using a very simple linear regression model, to the predicted betting numbers, which to me indicates that there's some bias there. The other thing too is I think there's a major imprint from 2016. So even though 2016's polling error wasn't really that huge, it was maybe a 1 standard deviation event, it was shocking, and we had abnormally large moves in financial markets. So if you look at the 10-year note, for instance, it jumped 75 basis points in the weeks to follow the 2016 win by Trump. And the stock market moved appreciably. There was this big growth expectation, and it seemed like things were really off to the races. That's not what happens typically around elections. Elections are not that exciting. If you go back, maybe you can throw out 1984, but you go back and look at past elections, yeah, we might hedge for it. In this case, we hedged a lot in prior weeks for this event, but the elections typically you don't see that big a move. So I think that the fact that we did see these outsized moves on the last elections getting filtered in to this financial market bias into the prediction markets, and that's causing the spread between prediction markets showing it's tighter than what people expect or what the polls expect, and so on, and polls are showing it, of course, a much wider margin.
Let me agree with you on one aspect of this. Time and again, somebody will do a survey of investors. The last one that I saw was Deutsche Bank 2 weeks ago. And the results of the survey of investors always line up with where the betting markets are. It doesn't line up with the polls. In other words, surveys of investors give Trump, and I always use Trump because I'm going with the incumbent point of view. 4 years ago, I used Hillary for the same reason. The investors are giving Trump around a 40% chance of winning the election. So are the betting markets. The polls are giving him around 10. If the polls are dead on right, and then we've got some movement coming a week from tomorrow, because we've priced in a 40% likelihood that Trump is going to win when it was never going to be the case at all, because according to polls, this election is over and we're just toting up the size of the Biden victory, not if there's going to be a Biden victory as well too. So I'll agree with you there that the bias in the betting markets, and by the way, there are several betting markets, and if you look at the London bookies, they all align with each other. So predicted is not more or less out of line with other betting markets than any of the other ones. It just happens to be the largest. So they're all aligned with each other. The big difference now is that they're out of line with the polls. That's what has been the surprising thing. And you're right, we got 7 days. Maybe they reconcile themselves. Maybe there's a poll surge and the polling analyzers raise their percentages for Trump, or the betting markets just start to crumble down to 10% by election day or as well. But I do want to emphasize, Trump has been trading under 50 since July. So it's not like I'm making the case here that Trump is going to win. It's just that it's going to be a lot closer of an election than people think. Ben, did you have any other thoughts? Otherwise, I wanted to talk about breaking down the states according to the betting markets as well.
Yeah, let me say this real quickly, and then after you do that, we'll get into some of the more pertinent market talk too. So we do a lot of work to benchmark polls and betting markets against what we think is a more pure measure on consumers and on businesses in terms of who they're favoring. Are they leaning left or right? And search activity, I think, is a great place to do this. So using Google search, what we can do is we can go in and say, within the state, how much are individuals talking about left-wing politics, right-wing politics, Democrat, Republican, Biden, Trump? And what we've seen here since really the end of late July, in particular the battleground states from Arizona to Wisconsin, is that blue wave. Is this leaning towards left-wing politics, Democrats, Biden, and this is pretty ubiquitous, and that's why it does side with the polls, and gives me some more confidence that the Biden and the blue wave ride is quite possible. Of course, it does bring up this risk, and I think is what everyone's building in, the Shia bias, like you said, Jim, the lingering effects of the last event in 2016, and everyone just doesn't really know what to do, because who knows what the heck we can actually trust here going forward. And we can get into this hedging, the volatility, the risks here after you go through some of these key numbers.
Yeah, so let me just say to you, you're right. I mean, if you go with the Google searches, maybe the mistake is Biden wins by even bigger than people are putting it out to be. And I'll throw this out a week before the election. Let's say it's 8 days from now, 9 days from now, and we come up with the conclusion, boy, the polls got X wrong or Y wrong. They got something wrong. I would argue to you ahead of this that what they got wrong was turnout because of all of the mail-in ballots. Yes, the polls will tell you that Trump is behind by 7% or something like that. That's probably the case if 100.0% of the population actually votes. But we expect 62, 63% of the population to vote. And really, that's where all of the error comes in, that I think that if that is the case, that they got something wrong, and maybe it is a bigger Biden victory, then in 4 years, the proper poll will be question 1, who are you going to vote for? Questions 2 through 14 are going to be trying to figure out if you're going to fill out a ballot. Because if you fill out a ballot, then your opinion counts. If you don't fill out a ballot because you didn't answer questions 2 to 14 right, then we're going to ignore you. And that it seems, because we just throw that out, a poll of likely voters. How do they come up with the likely voter thing? That's the critical element, is are you going to fill out a ballot? Not what is your opinion about who you're going to vote for. That's always been the case with college students. So college students are always emphatic about what they're going to do, and then they never make it to the polls to actually vote. But let me, before we get into markets, let me throw one last thing out here. Looking at the individual states, you don't have to be Nate Silver. You could probably pick how 42 of the 50 states are going to vote. In New York is going to go Democrat. California and Illinois are going to go Democrat. Utah, Wyoming, Idaho, Montana, they're going to go Republican on down the line. So if you assume that those 42 states are easy calls, then it really comes down to 8 states. All that goes accordingly. Trump needs to run the inside straight in order to win. He did it 4 years ago. How does that work this time? He has to win North Carolina, Florida, Arizona. Has to win those, assuming the other 42 states go as planned. And that means that if you hear, oh, Biden shocked and won Ohio, or Biden shocked and won New Hampshire, it's over. But you could go to start streaming on Netflix at 7:30 that night. It's over then at that point. But assuming that goes on, Trump has to win Florida, North Carolina, and Arizona. If he does all that, he's at 259 electoral college votes. He needs 270. Then he needs one of the following states: Pennsylvania, Michigan, Wisconsin, Minnesota, Nevada, or something along those lines. If he could sneak out one, well, not Nevada. Nevada doesn't have at least 11 electoral college votes, but the rest of them: Minnesota, Wisconsin, Michigan, Pennsylvania. If he could sneak out one of those states, he could then win if he takes Florida, North Carolina, and Arizona. So interestingly, we should know earlier in the night, because those are all East Coast states. Does Trump take North Carolina? Does Trump take Florida? Because he's got to run the inside straight. He's got no margin for error. He didn't 4 years ago, and he did run the inside straight. So that's how we'll have to see it. And again, it comes down to a shy bias. Ben, how does it look for financial markets? What does your analysis say about what we should expect on various outcomes?
Yeah, and this is where things get so difficult. And, we all know that there was a heavy degree of hedging activity, specifically in the rates market. And there was for an outsized move really towards the direction of higher yields. The ratio between swaptions, for example, for 25 basis point rise versus fall, we've talked about this before, we're leaning heavily towards a rise. We saw the VIX curve get that nice kink, and then expecting, weeks or months of volatility afterwards. Some of that's actually dampened, which is, I think, interesting. If you measure uncertainty via what you can find on television news or even news trends or Twitter, some of the uncertainties surprisingly come down, even though all of us want to debate what could happen, this potential close race and so on. And I think that's allowed a lot of the volatilities to somewhat temper. Now we are getting a little bit of a bump with some of the risk-off condition that we're seeing now, but I think the big crux of it is, since we're, Jim and I work for more or less a bond shop, is what's going to happen to yields, because remember, 75 basis point jump in yields occurred after the 2016 election, and are we going to see something like that again? And I think the answer is going to be based on, do we get the blue sweep, which I know the Senate and House going is right around a 57%, according to Predicted. At the moment, it's jumped up a little bit. If we do get that eventuality, which has somewhat been priced into a steepening yield curve, rallying tips break evens and so on, I think this pop out in nominal yields could have some legs. I don't think we get the 75 basis point move, but I think it's possible we do see 1%, maybe even at most, which I think would be the cap, around 1.25%. But then on the flip side, if we do see this, what Jim is talking about, the scenario where Trump outperforms or creates a tight race, either Biden wins, it doesn't take the Senate, which means that's going to complicate some of the fiscal policy, potentially initiatives, but it is tighter than normal. It's going to be some relaxing in that hedging activity we saw, the overt bias. We have this record shorts in the long end via the COT. We have this overwhelming hedging for higher yields, and that is a dangerous scenario because that involves a pain trade, meaning that we could see the long end actually drop in yield. And you have to remember, 30-year yields coming into this election, and thanks to how the Fed is operating with guidance, has the highest correlation it's ever had in history to all aspects of the curve. So I don't care if you look at 2-year, 5-year, 5-year, 10-year, 5-year, 30-year, whatever, its correlation is high. So I think the average correlation is around 0.85. So what happens there is going to happen everywhere. And so if you get this tight race or a Trump victory, I wonder if yields could drop quickly, meaning we'd have a pretty voracious drop and flattening of the yield curve, which I think, again, is that pain trade and the big risk. Equities, everyone's gone over this. Jim, you and I were joking about this before. We don't need to reiterate the buy cannabis stocks.
Alternative energy. Yes, buy alternative energy.
Right.
Yeah,
everybody knows this. Exactly. Getting the equity picture right is going to be a little bit difficult here. I think we know what will potentially happen just with higher vol in the days to follow, but there's too much to figure out in the fiscal policy front, and the candidates aren't different enough. If you look at CBO expectations for spending and debt, they're really not different enough that we know of yet to kind of get a game plan for what's going to happen longer term. So yeah, maybe regulatory, tax-wise, we can account for that, but the other stuff, it's just too difficult at this point. So I don't think we even really need to get too deep into that.
Right. And I would also say in terms of, how does the market respond to a Biden victory or a Trump victory? This is the single biggest mistake everybody makes, because the president is only 1/3 of the government. You still need to know about the Senate, and you still need to know about the House. The House is going to stay Democrat. That would be a shock beyond belief if somehow that was to change. The betting markets have it about 90%. It's going to stay Democrat. So that we'll put aside. It's going to stay. It's going to stay Democrat. But as far as the Senate goes, if you look at the betting markets, if you look at the polls, there's 53 Republican senators. I'll go again. They're the incumbency. They're looking at, and the Republicans are defending more seats than the Democrats this cycle. We're looking at somewhere between 50 and 51 Republican seats. If you believe the betting markets and the polls, they're somewhat aligned on this. If it's 50-50 and Biden wins, Harris breaks the tie, and it's a Democrat Senate. But you have a number of very moderate Democrat senators, Joe Manchin of West Virginia, who votes about half the time with the Republicans because he's from a deep Republican state, even though he's a Democrat. you get 50-50 with a Harris breaking of the tie, Joe Manchin is the king of the Senate because he votes with the Republicans a lot out of political survival if he wants to continue to be the senator from West Virginia. And if he keeps crossing over and keeps voting with the Republicans, he can put a brake on whatever agenda the Democrats have in a blue sweep. If you get 52-53 or more Democrat senators, then Manchin can break ranks all he wants, and they could still push through their agenda as well too. So the Senate becomes very important in this game. It isn't just, oh, it's 50-50, Harris breaks the tie, and here comes the gigantic liberal agenda. It might get stymied with that. If it's 53-54 Democrat seats, that makes a big difference. So Trump beating the point spread, since it's football season, which we were talking about, losing the game, but beating the point spread by a big way. You know, if you think about it in terms of the way that the pollsters have it, they've got Trump as an 18 to 20 point underdog. And if Trump loses by a field goal, that might be enough for the Senate to basically either stay Republican or be razor thin. And then Joe Manchin runs the Senate then at that point, because he's got a long history of breaking ranks with the Democrats and voting differently than anybody else. He's the #1 Democrat senator that votes the most with the Republicans. It's still less than 50%, but it's not like 3%, which is what most everybody else does as well too. So that the Senate is critical towards the agenda, because the agenda of increased regulation, reversing the tax cuts, and more fiscal spending will come down to, can they get 51 or 50 votes plus the vice president to go along with it in the Senate? And if it's 50-50 and Manchin says no, then things have to change quite a bit as well.
I can support that too. So today and yesterday, I've been building a lot of models, essentially taking predicted, in this case, looking at probabilities of winning the House and the Senate, and then also versus the probability of just a Democrat or Republican president, and then also combining that with other factors to explain, for example, the S&P 500, 10-year notes, high yield, and so on. And there's one metric that within these kind of models that allowed for interaction between the terms that kept popping up and getting multiplied essentially against other variables, and that was the Senate, predicted probabilities of the Senate. So if anybody was looking for something, I know there's not a huge history of it, but whether or not the Senate comes along seems to be filtering the most into all markets based on these modelings. The actual presidential election itself has had very small amount of significance and predictive power across really risk and safe assets. So anyone that's building these models here, trying to, you have a short amount of time now, but if you're looking at these models, looking what to incorporate, that is the one metric that I would look at, just because based on my own deep analysis, that is, on a ubiquitous level, popped up as something of significance as an interaction term within, gauging financial market performance.
Well, Jim and Ben, I will ask you if you could each just take some time to give your summary comments while we prepare the final question list, and we'll come back with questions when you're finished.
Yes, as far as the final summary list goes, I do want to throw out one other thought to keep in the back of your mind. Polling shows that the majority of Democrats are going to vote by mail or early, and a majority of Republicans are going to vote on election day. And that brings up the idea of the Red Mirage. And the Red Mirage is election night, when you're watching the returns like I am, you're watching the returns of those that cast votes at the polling stations. That could show by the end of the night, and the betting markets are putting about a 40% chance of this happening right now. That could show by the end of the night, Trump is leading or even has more than 270 electoral college votes. Trump, don't be surprised if at 2 o'clock in the morning comes out and says, I won. Then they open up the mail-in ballots and they start counting them. One state after another flips when you add in the mail-in votes, and that by the end of the week or into the week after, Biden is now leading. And I'm not suggesting any fraud here or any voter suppression or anything like that. Perfectly legitimate. That could be the worst case scenario because I don't think a lot of people are going to accept it. Trump will announce he won. He will announce it's been stolen from him. Or if it happens the other way, if Biden announced he won and the mail-in votes surprised him the other side as well too, it would be equally on the other side as well. So what I hope is whoever is leading at 2 o'clock in the morning on election night is the same person that is inaugurated. And we don't try and change it days later because that could cause a problem. Ben, what are your final thoughts for you?
Yeah, I think there's a chance again for big uncertainty. New York Times had a pretty timely article this morning regarding the delay of mail and how slow things are going. In particular, states like Wisconsin, Pennsylvania, and North Carolina have some of the largest delays in mail. I think from 1 to 5 days. I think that would be, a very upsetting scenario for this to, really get pushed down the pike. Markets have somewhat pulled back the hedging activity and volatility expectations just a little bit. But I think there's a possibility that, on that election day, we do get some outsized moves and rush for protection in the event that does happen, where we're going to have to wait days, potentially weeks, and we get this contested event. Now, the other thing too, I think, is that I think we should all really heavily consider what Jim and I were discussing earlier is the fact that what we could have is an election that goes pretty well for Biden. As Jim laid out, there's some states that Trump has to take in order to get this to work. The landscape is much more akin right now to 2008 than it was to 2016. So really, it's up. It is there for Biden to take, and there are states like Texas, Florida, and so on would ultimately be gravy for him. But if we do get this landslide event, I think that is something that isn't necessarily in individuals' investors' game plans, and that's where this break higher in yields becomes important, and that's where we'll have to start really considering, how are the VIX and MOVE moving with one another? How is inflation filtering into potentially to overall financial market risk and so on? That creates a more interesting scenario for all of us, that's for sure, being a bond shop. But I don't think that you should have that out of your mind, even though all of the rhetoric and talk goes towards this potentially tighter race than expected.
Yeah, and I'll just reiterate that, and then we'll jump into questions. That if really the question comes down to is there a hidden Trump vote, kind of like there was in 2016, or have the pollsters adjusted for that and are now capturing it? That's what the pollsters' argument is. So they say, yeah, we know about the hidden Trump vote and we've adjusted and we've got it in our numbers. So there isn't no hidden Trump vote. It's right out there in the open. We'll have to see. But it really comes down to that question. If there is none, or if there's a hidden Biden vote or something like that, and there is a big landslide for Biden, remember the markets are still thinking that Trump's got a 40% chance of winning. But if it turned out he only really had a 5% chance of winning or a 3% chance of winning, it's a Biden rout. There's going to have to be some repricing in markets. If it turns out that Trump outperforms, well, that's kind of where the markets are right now. So the markets are not aligned with where the polls are. They're aligned with where the betting markets are. Again, I can't find an example where they've been this different a week before an election. We'll see if they converge, and then we'll see what the eventual numbers are. Kristen, what about questions? How are we doing on questions?
Yes, so we have a couple questions we'll get to. The first one is, if Biden wins, I guess he'll focus first on fighting the virus. Do you think another lockdown is possible because he is more open to the idea and we're at the beginning of winter, not like at the end in March?
That is the single hardest question to answer. I think he is more open towards instituting more lockdowns. But now that I've said that, earlier today, Macron, the president of France, if you look at the French numbers, they're spiking. They're going straight through the roof in terms of France. I had a post on it in News Clips today with this parabolic rise. He is suggesting that all of France is going to go back into lockdown. And there is nothing short of rioting in France right now, that people are sick and tired of lockdowns and they don't want to go back to them anymore. And I think that is a signal for us. If Biden wins and Biden says, look, we're over 100,000 cases a day. We're 60,000 now. we got to lock it back down to stop the virus, we're going to look a little bit like Europe. And there's going to be unrest in the streets because people are sick of it and they don't want to have it happen anymore. And that could temper it. So I get it that they want to, and this is the dilemma that Europe is facing. The virus count is going up in Europe. And by the way, I'll reemphasize this again. The virus count is the reaction function. I believe that that's what governments and people react to, is how fast the virus is growing. You could argue that the death rates are down. You could argue that the therapeutics are better. True and true. But the reaction function is virus count goes up, lockdowns come back as well. And if they're struggling in Europe, we know that the virus count's coming back, but people don't want lockdowns. We beg them to wear masks. I don't know what else we can do beyond that. If that's the problem that Europe is facing, and that's essentially where they're at right now, we're going to have the same problem. So it's not going to be as easy as I won the presidency, shut it all down for the virus one more time. I think we're too sick of that for it to happen. Ben, any thoughts?
No, I agree. Real quickly, they don't have the political will, I think, to push that through. I think we've all learned how Americans react, and I think that it would be very extremely difficult to do that. I think localized shutdowns are possible based on hospitalizations ultimately, but I don't see a full nationwide lockdown happening.
Right. Next question.
Okay. Our next question is, do you think the presidential race actually might be tighter in swing states than the polls suggest?
Well, that's the whole shy bias with Trump, because if you look at the Real Clear Politics national, not state average of Florida, and the state average of North Carolina, and the state average of Arizona, Biden is leading by about 1 to 2 points. Biden is leading. Now the polls are plus or minus 3 percentage points. So that's within the margin of error. But the betting markets have got Trump at 54% for North Carolina, 58% for Florida, and they got him at 48 for Arizona. 48, that's not a shock if you win and you're already trading 48. They're biasing themselves by saying, whatever the polls are, add 1 to 1.5%, because that's what they think Trump is going to get, and then we'll put him over the top. That's going to be the real question. By the way, it's going to be a very difficult question to answer. In normal periods, we would answer that question through exit polls. Do you do an exit poll? The great thing about exit polls, you grab somebody as they're walking out of the polling booth, you know they voted, and then you ask them a bunch of questions, and we could get a good feel for how people voted in terms of exit polls. With 60 million people that have already voted by mail or early, and more coming, the exit polls are going to be massively skewed, and it's going to be very hard to kind of get a feel for how this is going to work in terms of whether or not there's a shy Trump vote, especially because when we're done counting the polls, because remember the rule is, especially in Pennsylvania, Wisconsin, they can't start counting the mail-in ballots until the polls close. And they all said, Pennsylvania said, we're optimistic we'll have them all counted by Friday. By a week, 3 days after the election, they'll finally have all the mail-in ballots counted. That's their hope, is by that Friday. So we could be waiting days and days if these polls are a lot closer than people think, with the mail-in ballots starting to float in. Ben, any thoughts?
Yeah, we won't know until we know, and like you were just saying, it could take some while. There's that uncertainty and potential additional hedging needs that everyone will have to have. But the only other source that we can go off, that I can go off again, is that alternative data of search activity, and that does corroborate the the slight bias towards Biden in all of these swing states. I believe Florida actually did turn towards Trump just on the latest update as of a couple hours ago. So this is getting rather interesting. We'll update the search activity, but as of the update through 2 days ago, they were all still across all of those battleground states, again from Arizona to Wisconsin, leaning towards Biden and really left-wing politics. So I think the onus on there is just, like Jim said, is let's see some of these swing states early start to go for Trump, and we won't know until we know. But most indications are that the Bidens to win on a small scale.
Kristen.
Our final question today is Biden's tax policy setting up for MMT?
Ben, you're the MMT expert. Why'd you take that one?
I don't know. I think there's such a misunderstanding of MMT, and again, we could have a whole webinar conference call about this. And I think that again, this gets back to, for us to even worry about that, we need the Senate for sure, to go. So he's going to need full congressional support, both the House and the Senate, in order to enact anything that would look like MMT. And he'd also have to have, not necessarily a Federal Reserve that is going to be fully supportive, but one that's going to be somewhat complicit in allowing that spending to occur. And I think the Fed's new reaction function of financial stability as their third mandate and keeping markets going and functioning, they can lean on that without saying we're allowing this rampant spending and rampant debt and deficit, negative deficit to occur. I think they can fall back on that for the most part. But again, there's a lot of things that are going to happen here first to get the full blown MMT. I know Jim and I like to debate how big the deficit is and debt, and that it's getting colossal. It should cause inflation. My take is that, boy, there might be a lot more room we don't realize that we could really go before we hit that barrier, the point where we get inflation and maybe markets get worried, we get bond vigilantes and so on. But that does get, again, just to wrap it up, it gets down to the Senate. Could we really see MMT and the taxes? If you get into the, Stephanie Kelton's book, you learn taxes are really the kind of the lever in terms of scaling back the amount of inflation that's being present within the economic system. And I could see them using that. That's a different reaction function, different kind of system than a typical Democrat coming in and spending and raising, trying to raise taxes, and especially in the rich and so on. It's a different thing. So this is such a complicated, but we'll be talking about this, I'm sure, a lot next year if the Senate does indeed go Democrat.
Yeah, I'll just say, I agree with you, it's complicated, but I'll just say this. Biden keeps saying, that we got to get the rich to pay their fair share. That means, code word, taxes are a form of punishment. According to MMT, taxes don't need to be a form of punishment. They need to be an economic reality. If you can borrow the money without having inflation, then lower taxes and borrow the money. If you borrow too much money and inflation goes up, then raise taxes to suck money out of the system. Ben, where I agree with you that MMT is a very descriptive thing. It's proper that if you've got inflation going, you want to kill it, raise taxes. But if you can borrow a boatload of money, which is what we're doing exactly right now, and you don't, because the deficit is 16% of GDP, and you don't have tax and you don't have inflation, then you don't need taxes as well too. So that's the way I think it works. And you're right. If we have a blue wave, I have a feeling this is a topic we'll be talking a lot about the next year. Kristen.
Well, thank you both for your thoughts, and I want to thank our audience for joining us today. As a reminder, Arbor Research and Trading is an institutional research and brokerage firm. Our two most prominent research offerings are Bianco Research and Arbor Data Science. For further information, please contact Gus Handler at gus.handler@arborresearch.com. You may also visit Jim's website at www.biancoresearch.com. or Ben's website at www.datascience.arborresearch.com. Thanks, everyone, and have a great day.
Thank you.